Hello and welcome. My name is Anupam Anand and you're watching Freedom Money English channel. Today we'll be talking about the big changes that are going to happen from the December month, and surely that is going to affect your life and my life. So watch it till the end so that you're prepared and you're ready. We all love to keep up with the changes that can make our lives very simpler and safer, isn't it? So imagine finding out about the policies and changes that can protect your identity, secure your financial transactions, and bring clarity to the procedures. It's amazing how a few simple updates can actually influence our everyday lives, right from financial safety to crucial pension processes and more. In today's video, we are bringing you the latest and the most important updates from December 2024 that can impact your finances, identity documentation, and more. We'll talk about the changes in money transfers, pensioners' requirements, interest rates for savings schemes, and even free Aadhaar updates. Stay tuned and let's break it down together so you know exactly how these changes matter to you and what you need to do. First, let's talk about domestic money transfer rules. So let's start with the recent changes in domestic money transfers, or DMT, by the RBI. The RBI has strengthened the KYC norms for money transfers. So this means individual who wants to transfer money domestically will need to ensure their KYC documents are up to date. So why this change, you might ask? This update aims to protect you from frauds and scams, which have been on the rise with online transactions. So with stronger KYC measures, your money transfer is safe and your transactions become more transparent. You will notice these updates particularly if you use mobile banking, payment apps, or even if you transfer money through bank branches. What does it mean for you? If you have not recently updated your KYC, it's time to do so. Updating KYC can resolve submitting documents like your PAN, Aadhar card, passport, or voter ID. Different banks may have specific requirements, but the goal is to verify that the person making a transaction is a true account holder. So whenever you are asked to update your details, think of it as one more step towards safety and security. To avoid any delays or issues in your money transfers, make sure your KYC information is accurate and up to date. It's best to check with your bank about your specific requirements and complete it as soon as possible. Remember, safety starts with being prepared. Now let's talk about EPS Pensioners Life Certificate. Moving on to an important update for pensioners, specifically those covered under the Employee Pension Scheme, or EPS. Now, did you know that pensioners need to submit an annual life certificate to continue receiving their pensions? Yes. This is a way for the government to confirm that the pensioner is still alive and eligible to receive the pension payments. So this year, EPS pensioners needed to submit their digital life certificates before November 30th. Unlike in previous years, this process has now been simplified to make it more convenient. Before this year, pensioners were expected to physically appear in the banks to submit their life certificate and confirm that they are alive. But now they can actually use Jeevan Pramaan app to generate digital life certificate online, or they can visit the Jeevan Pramaan centers to get their digital certificate. This app is user-friendly and enables pensioners to authenticate themselves using biometric details like fingerprint or iris scan. So for many elderly citizens, making this submission can be a challenge. If you have elders in your home or family, make sure you help them out. It's a matter of just few minutes and can make a big difference in their financial security. And to all pensioners, remember to submit your life certificate in time. The digital option is great because it's quicker and more efficient than standing in the long queues, of course. And family members, a small effort on your part can actually bring a big smile to your loved ones. So let's spread the word so that no pensioner misses this out. Let's talk about interest rate policy. There's an important update regarding interest rates for small savings schemes. Many of you have investments in Public Provident Fund, Senior Citizen Savings Scheme, SCSS, Sukanya Samriddhi Yojana, SSY, and other such schemes also. Well, here's the update for you. There are no changes to the interest rates for these schemes until the end of December 2024. Now, why is this important? So these schemes are popular among people who want a steady and safe return. For instance, PPF offers a reliable way to build wealth over longer period, while the SCSS is specifically for senior citizens looking for secure income. Keeping interest rates unchanged means that the government is maintaining stability amidst the changing economic climate. It also signals that there won't be any cuts in returns in the near term, so that you can actually plan your savings accordingly. Whether you're investing for your children's future, or your own retirement, or for other goals, small savings schemes can actually continue to offer a stable and safe route. Now let's talk about SBI Finance charge hike in-depth explanation. Alright, now let's talk about SBI Finance charge hike. Starting from December 1st, SBI is increasing its finance charges on loans and cash advances to 3.75% per month, which translates to a 45% annual interest. Now, what does this mean for you? Let's say you are carrying an unpaid balance or using cash advances on your SBI card. So at this higher rate, unpaid balances will accrue interest more quickly, making it harder to pay down your debt over time. For instance, on a 10,000 rupees unpaid balance, you would now incur about rupees 375 in interest each month. With the compounding effect, this adds up substantially if left unpaid. So it's crucial to plan your credit card payments and avoid carrying over balances whenever possible to sidestep these high charges. SBI utility payment charges additional costs for larger bills. For SBI card users paying the large utility bills, there's a new 1% fee on utility transactions that exceed 50,000 rupee in a billing cycle. So this might affect users with high monthly utility expenses, such as business owners or families with large households. For example, if your electricity bill is rupees 50,000, you will now pay an additional 500 rupee fee. This fee can add up if you frequently use your card for substantial utility payments, making it worth considering other payments methods for these type of expenses. There will be no free Aadhaar updates after 14th of December. And last but not the least, there's an important update about your Aadhaar cards. If you have not yet updated your Aadhaar card details, here's some good news for you. The government has extended the deadline for free Aadhaar updates until December 14, 2024. So this is a great opportunity to ensure your Aadhaar card has your latest details without any charges. The extension has been announced because many people still need to update their Aadhaar card details. Maybe you have moved to a new place, changed your contact number, or you might need to refresh your biometric details. Whatever it is, now it's the best time to do it without spending a rupee. So you can visit the official UIDAI website, book an appointment, or you can visit the nearest Aadhaar Seva Kendra. So don't miss this opportunity for a free update. Make sure that you and your family members' Aadhaar details are accurate and up to date as well. It's one of the most simplest steps you can take to avoid any identity verification problems in the future. ITR late filing deadline, your final chance. Big news for taxpayers. If you have missed filing your income tax return for the financial year 2023-2024, there's still hope. The final deadline for the late filing is December 31st, 2024. But remember, this isn't free. Filing late comes with penalties and extra interest on unpaid taxes. So, if you have pending ITRs, don't wait till the last minute. Gather your documents, clear any dues, and file it online. Missing this deadline could actually invite notices or even trouble from the income tax department. So why take the unnecessary stress? So, mark your calendar for 31st of December and ensure your taxes are sorted before the year ends. Stay responsible and stay stress-free. Alright, so there you have it. From safer money transfers and digital life certificates for pensioners to stable interest rates and free Aadhaar updates. So these changes are meant to make your life easier and more secure. Each update is a step towards creating a better financial and identity security system for all of us. Managing your finances smartly is the key to saving more from your salary. Tracking your expenses, setting aside money for savings, and planning your monthly budget can make a huge difference. And one of the best tools to make this process easier is Microsoft Excel. With Excel, you can create detailed budgets, track your expenses, and visualize your financial goals all in one place. So if you're not familiar with Excel yet, don't worry, we have got you covered. Check out our MS Excel course on the Freedom app, where you'll learn all the tricks you need to manage your money effectively. The course is available for just Rs 399 per month, and that's not all. With a subscription of Rs 399 per month, you can also get access to a whole category in personal finance, farming, or business. Or if you want to unlock all our courses, it's just Rs 999 per month. So, if you want to take control of your finances and make the most out of your salary, download the Freedom app now and start learning from today. Remember, knowledge is power, and the more we understand the rules and updates around us, the more confidently we can handle our finances and documentation. If you found this video helpful, please make sure to like, share, and drop your comments. And subscribe if you haven't yet. See you in the next video. Thank you.